The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and thank you, Steve, for 2 great hours. We just kicked this off here at TFNN, 9 o'clock. Bam, we're on the way. 2 hours of Steve Rhodes. I come in for an hour on a Wednesday. Straight off me, you got, what's today? Wednesday. So you've got Larry Pesavento. After Larry, you've got Daryl Martin. Then you've got Dave White. You've got Tom O'Brien, 4 o'clock to 6, wrapping up. Now, folks, don't forget the safest way, the easiest way, the best way to save money, to extend your dollar amount is to go to the front page. Please check out the Tiger Dollar promotion that's going on right now. 25% bonus. It's unbelievable. It really is. I know a number of people for my webinar on Friday had taken advantage of that. Now, what I'm also going to tell you to do, check out our different services. My service is the opening call, very comprehensive look at the markets every day. I show let me show you right here what I do. I give a very detailed interpretation of the Dow chart, what we're looking at, why we're looking at it, how it fits in the Chapman wave methodology, how I can explain parallel moves, how I talk about the number of bars to the downside, to the left side, to the right side, how you can get a price time match, how you can get to see that little thing there, inside check that took you to the exact day of the 15 bars down, 15 bars up in the Dow. I discuss exactly what we're looking at. And I also then go into much greater detail because I show this in the, oops, can I get it? Yeah, it's right there. The diamonds, Dow diamonds. I drew the pattern. I see there are 2. What happened to it? Oh, thought I had it. Oh, I had it on the E-minis. I had it here and then I took it off. I had a parallel wave count. No, I had an alternate wave count. So I'm doing 2 things at once here. Where I wanted to show, especially here on the E-minis, let me just go to the E-minis and you'll see, there it is. There's the rectangle formation. Very often within the rectangle formation, you can get a rally that goes to the top after a sharp decline, forms a base, and then if it fails at just below or just above the previous left side high, like a flagpole pattern, you can expect a trading range to begin and then on its way down. And then what you do is you count the troughs. In this case, it's trough A, B, C, we're in trough D. That's where you can expect a bounce. Got a little bounce here. But you've got to wait for the technicals and other parameters to unfold to see whether or not there's going to be another move towards the upside or whether the containment pattern picks a particular moving average, in my case, or a chart pattern. Here it's a moving average. It's the 200-period moving average, which was support earlier on, around about the 8th and the 9th. Then what we do is we get, oh, there wasn't a 9th, right? It was the 8th and the 10th. And then what we get is 1751 is the area of major support if there is another turn down later today. I'm kind of impressed with what I'm looking at thus far. One of the reasons in my opening call, that's my daily newsletter, which looks in great detail at the stocks we have, stocks we would like to get, stocks that are very impressive at the moment, but I'm not yet ready quite to put to get a buy in them. Also, I show the 5 quintiles. Here shows you the Dow 120 chart made an unusual peak G. Within that framework, there's that rectangle. And I typed this in weeks ago. I said, will this area be partially filled? And, well, at least over a week ago, 10 days maybe. And that's that area under the 1550 to 1450 area. Will that be filled? And on the upside, I said, will the VIX 120-minute chart start to fill the section there that was empty, basically, because it hasn't been there for quite a while. And that's up in the, up in the 14s. Today it's gone to leg B, pulled back quite sharply so far, but the day's young. This is a 120-minute chart. We've still got to see what happens over the period of the next few hours. Most importantly, there is no recognition in the trend Richard Arm's short-term trading index to say that, in fact, the what we're looking at, which is the, in this case with the black background, what we're looking at are different levels of buying pressure and selling pressure within the trend itself. Now, I'm probably more likely to call it, even then, fear and greed is not an accurate description. That's just an emotional description. I'm selling and buying pressure for the VIX index. In the trend, I just look for very low numbers and much higher numbers. And within that parameter, I haven't had anything yet that's broken down severely to say that we've become overbought in the volatility index, meaning that it's way oversold. How do I explain that? If it's very, very low, it's showing lack of selling interest and on particular stocks. And if it goes much higher, it says there's a lot of selling interest. So let's just do the next thing here. That's the Dow chart. See, I'm quite prepared, actually. I'm very close to saying there is a chance that we're making a rectangle formation there and a rectangle formation. Yes, certainly it looks like a rectangle. And I always say in chart formations, if it looks like a certain pattern, don't deny it that the privilege of being that pattern. Don't say, oh, it can't be, because it is. This one very clearly fits the oval pattern. That's Chapman wave leg body. If it breaks, if the Dow goes under 15, I've got to go to that one. Under the 15,540s, that negates it. But if it holds within here, if it doesn't break down in the next 2 days under 15,090, 15,070, and it starts to move to the upside, we might even see a sudden projection over, say, 16,797 for what I call the neck. And then if that forms a little head, it can come right back again. Very interesting patterns. So I usually treat it mostly for the Dow, but occasionally we've seen it in others because it's just a pattern that forms. There it is in the S&P. Okay, well, let's move on. We've got the, let me just get rid of this here. We've got the Dow down 63 at 15,687. You got the S&P only down 222. Hey, that's 500 stocks are only down 0.12. The Dow is down 0.40. But sometimes the Dow can lead. So I'm going to be watching this real closely. And the Dow seems to be affecting the volatility index because it's holding quite well here. So the S&P is at 1765. The comp index is now up to at 3921. It was down about 9 or 10 before, so that's good comeback. Gold is up $3.50 at 12.74. I'm watching gold closely. Gold and silver. Silver's down 10 cents at 20.67. I'll tell you why. If over the next 3 sessions, so today's Wednesday, I'm talking about Thursday, Friday, and Monday, if for any reason there is a sudden sharp decline, and it includes the S&P and the NASDAQ 100, that's the QQQ series, I'm going to look at that in a moment, I'm going to be watching closely to see if there isn't a move into gold as a harbinger of safety. That means if I'm looking at gold, I don't have any signal right now. I also have to say, wait a minute, hold on. What's the dollar doing? Well, the dollar's had a beautiful high-level consolidation. Let me move the 120-minute chart away here. It's in a very powerful leg A. Normally the move after leg A, which if it makes a peak A at 81.48, and this month so far 81.46, this week so far 81.46 is the high, then I'm looking at this and I'm saying to myself, well, whoa, wait a minute, high-level consolidation, stochastics at 86%, MACD is very good, nice action. Why? Because as I talk so much about, I use certain moving averages that I think are just really important, and it's only important based on the history of what I've done, how I've looked at charts, when I started to include moving averages, because before I used to just do hand-drawn charts back in the 70s and early 80s, and not of everything, but mostly of the indexes. And so I'm very aware of how much other things can add to your, what I call that huge Sears and Roebuck toolbox when you need a tiny doji candle as an indicator and it shows up, you must know how to use it. You must know when it suddenly shows up like a round number. How important is it? What is it doing? How can it benefit you? How can a trend line, where I'm using a technique that I've developed over many years, which is called the inside track. That inside track says normally the price will be, it has a history of being propelled. In this case, I use the green line because it breaks above it. That's positive. And the red line because that's where the prices get. And the dollar kept getting repelled. It hit 80.93 and it couldn't break out. Then suddenly, on the 7th of November, pop, it goes up. That was a Thursday, I think it was, yeah. Friday. And then it breaks out. And then all of a sudden, what we've got is double highs at 81.48 and then 81.46. That was yesterday. We'll see. Can today go above 81.48 to start leg C? So that's B in the daily. And I'm talking about the weekly chart. The weekly chart is in leg A. So far, the daily is saying, hey, you've broken above the resistance. The MACD is way powerful. Stochastics at 86%. Can the MACD in the weekly chart break above and show strength? I didn't want to draw a trend line down here. It's just way too sharp. The trend line that I would like to draw is from here. And I did some work on trend lines during my all-day webinar the other day. So let me show you this trend line. All I do is put in a parallel, new parallel, and there it is. And I'm actually going to go to the outer one from that peak F top in the weekly. And that says if the dollar is able to break into the 81.70 area, there's just a really good chance, depends on which week because it's a sharply declining moving average. If it's this week 81.86, if it's next week 81.73, that's the trend line to break. So any closing Friday afternoon in the next couple of weeks that sees the dollar decisively into the 82.30s, it'll probably be intra-week on the daily chart, and you'll already know beforehand. But if it's acting really well, that says above 82.10, 82.20, you can easily look at the candle on the left side of 82.67. So this is, according to the counter trend bounce in the monthly chart, probably as well as in the weekly chart, but the daily chart is saying the dollar is still strong. So that puts a lot of pressure on gold to be completely independent and to be able to hold the lows. See that candle that was formed yesterday? It isn't the Roman candle, Chapman wave Roman candle, but we certainly went deeply into it. Let me just move that away because that is already passé. It's history. So what we're looking at here is that gold has made an inverted V or an arch formation. Now it's taking its time to break down to the 1251 area. So that's positive because it can have a little bit of a bounce between 1274, 1294, maybe even 1302. Then it makes the H pattern. Wouldn't be surprised if it starts to decline again after that and take out yesterday's low of 1271.20. Basil Chapman, Tiger Technicians Hour. Got a bunch of calls and we've got a question in the den. I'll be right back. Oops, I couldn't get to Ben before the break. Sorry, Ben.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and the Dow's down 56, S&P's down $1.73. Comp Index is up 2-1. An interesting market, a mixed market today, but that's different to if the S&P was down 7.3, which would be corresponding to what I'd normally be seeing if the Dow was down 57, and then the comp index would be down at least 6 to 7 points. So this is a positive so far. Well, let's go to Ben in Tallahassee. Hi, Ben. How are you?
Hi, Basil. Great. I'm going to try to stay on as long as I can, but I apologize if I have to drop off.
That's no problem.
Yeah, so totally agree. Boy, that daily in the diamonds sure looks like a good old stork leg. And my question is, in looking at the diamond weekly, anything that you can deep dive and glean from that can help us understand if that daily is looking
has the
more and
potential
more like a stork leg?
Right. So, folks, what we're looking at, I'm actually going to go straight because it's already drawn in. The weekly chart in the Dow has the pattern that I was talking about when I drew it in here in the daily Dow and the daily S&P. That's that yellow oval pattern right there. Basically what this is, it's a pattern that is a potent pattern because what it says is that all the legs together make one leg in a chart formation. And from 124.42 in the Dow Diamonds, that's the trading vehicle for the Dow, trades 1-to-1 with the Dow. And that was the week of the 16th of November. There was a move that went peak A, B, C, D, and then A/E. But that wasn't the issue. The issue is that at that point, it turned around, and it formed what I call an oval formation. And it really does look like an oval formation. And that I call the body. So the entire leg going all the way from 124 to, I believe, 155, that's leg, a leg. Then you get the body. Just like a stork has a very thin leg going, and it stands on one leg, and then it has this large body. And then there's the neck. And now we've started the neck. But the neck sometimes can be just barely above the body. In this case, 157.80, and the previous high was 157.33. So that's one of the instances where if there is a break below a certain point, I would say, yes, that's the neck, and we're starting, the head and the beak all fit into one movement. And if the Dow Diamonds breaks under 154, the 9-period moving average of 154.77 in the weekly, that'll probably drag the MACD back down and the stochastic towards 83%. I really need to see on the weekly chart the stochastic under 80% for me to feel that there is a pretty serious sell-off coming, rather than what I'm anticipating, well, from my newsletter, some kind of a pullback here, but I've made the stops really tight. We still have the longs. We still added to the longs. So I'm treating this as a mixed market, and I'm trying to trade it as a mixed market. Now, back to the daily. The daily chart says that if there was a spike above 157.80 at this particular point, I would call it leg F, at least for now. And the basis for that is that the Dow daily that I've been showing today, and what I show subscribers, has such a perfect match, except for one little thing, that the MACD is only now about to turn down, and that matches with the 28 bars, 28 sessions, from the low of, I can't show it here because I've changed the setting, of 40,551 back on the 24th of June, and that was 28 sessions to the 2nd of August high. Well, look at this. We're into 24. This is bar, I believe, 25. Let me just double check. 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Yep, we're on bar 25. That could allow for a sudden pop-up between now and 26 would be tomorrow, Thursday, 27. Yeah, that would allow 28, bar 28, to maybe even get to a leg F in the Dow daily, and then we've got to be very careful. So in this area that we're in right now, I would say that in the Dow itself, there's 15,797 was the high. My anticipation, it'll go just slightly higher if it does go higher, because there's all that resistance, 15,810 to 15,820, between 15,799 and 15,820. That's where I anticipate that we will get a sudden sharp sell-off. There's one thing that I've got to mention, and I'm going to mention it now. I gave a suggestion of it yesterday, that if, because my Dow Quartet, GE, IBM, MMM, and UTX some have made recovery or recent all-time highs, if they continue to act well, there is a chance that they could get a higher spike. So to sum up, a move over 157.81 says, yep, you could go maybe another 40 cents, 50 cents, even another dollar high in the diamonds. A move to the downside says under 155.90, expect a test of the 55.15 area. Hope that helps you.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone, we're back. Dow's down 49, S&P's down 90 cents, and we're going straight to Travis in St. Louis. Hi, Travis, how are you? Travis? Whoa. Travis, you there?
Yeah, I'm here. Can you hear me?
Okay, good. Yep, I can hear you fine. Good morning.
Hey, I haven't talked to you since your World Series win. Congratulations, man. It was a tough one to swallow, but I congratulate the city of Boston.
I personally had absolutely nothing to do with it. I'm a fair weather friend, and it was a fantastic. I watched the last three of the series, and I was just so impressed with these guys. There was a determination, and all around, I mean, it was just a fantastic series that I've watched anyway, at least the bit that I watched. Yeah. So now we're moving on to the next year, and we're moving on to the next stock.
There you go. Hey, one comment. I know last week you talked about a gentleman that was going to build the tallest, I think you said the tallest building in New York City.
Tallest residential building, correct.
Residential, okay. I just wanted to add one other comment that I actually heard a gentleman on TV last night. It was on one of the business channels, and they were talking about the stock market. And he honestly said that he goes, his exact words were, "Why would you not be invested in the stock market right now?" He said, "The stock market has become the foundation of our economy." And I just sat there and I was just flabbergasted.
I have so many things. I'm showing here in the den. I'm going to show subscribers tomorrow morning. Oops, it doesn't quite fit in because I had it in a different format. This is from the Boston Globe today. It's a stretch, but New York City building tallest. Sorry, Chicago. Willis antennas don't count, by Patrick McGeehan and Charles Bagley. So this is very interesting. It shows the World Trade Center. A very interesting building, a lot nicer than I never did like the Twin Towers from the moment it went up. I thought, gosh, that's just way too square. It was just functional. It was from actually the design was very close to the 1960s, those boxes. And I what can I say? So what we've got is a building that has some chisel shapes to it. It's very interesting. Looking at it, there's no way that spiral can be called a spiral. It is not. It is an antenna. This is just a purely politically motivated thing. You know how these things work, sentiment and all that. But this is exactly what I said for subscribers. I wonder if I've got it right here. Yeah, I do. There it is. For tomorrow, I'm going to show my subscribers. It's a stretch, but New York City building tallest. And then what I've got here is my commentary. And my commentary says, this is purely a political issue since the spire/antenna issue has been around since the late 1920s. I don't know if you know the story. When Mr. Chrysler had a secretly built spire included within the dome of his new building, then late one afternoon when no one was looking, chuckle, the team stealthily hoisted the spire to quickly announce that it was the tallest building in New York, thus besting the 40 Wall Street 920-foot footer with its 10,046 total height. That's the new Chrysler building. Ta-da! And that's the way it works. So there's this controversy that goes on and on between architects and city planners and environmentalists and all sorts of people that say such and such should in fact be a spire and such should be an antenna. Well, it's a very subtle difference, and the difference is that if the building was designed with what they call a spire in mind, and you know that any of the world's tallest buildings right now are going to include some kind of an antenna because what do you call those things? It's a cash cow because they're going to be getting from the antennas. They're going to be getting money every month or every year. So they're all going to do that. And now here's the issue. Together with that, last night it was announced that the auction that went off, the Modern Art auction, Balloon Dog, an orange balloon by Jeff Koons, got $58.4 million. I remember in 2007 I was talking about exactly the same thing. There's something by Francis Bacon. This is not the old Francis Bacon, the English guy who wrote madrigals and stuff. This is a triptych, 3 studies of Lucian Freud, who was evidently a buddy of Francis Bacon. And that went for a huge amount, and the total, I wrote it down somewhere, whatever it is, some 640, I can't remember, million. That was a record. So I've been talking about this. Some of you might recall that 2 years ago I said, okay, now we start to go into the modern art and modern architecture phase. That's the phase we're in right now. That's very important. So if I start to list all those things that I look for major market tops, then what I'm looking at is that I'm already starting to put together all the those requirements, but I'm missing 2 very important ones, and I don't think I will get them until the first quarter, somewhere around the first quarter of next year. So I believe we've still got a good few months to go, maybe 4 months to go, I'm not sure, but we've got time to go before this market turns into a regular old casino, just like in 2000, and I suspect that that's what we'll be seeing. So any very serious pullback that we're looking at, I think we'll find buyers. That's number one. Number two is that we're also looking at, I think, retail this year for the successful clothing stores, apparel stores, are going to have a fantastic year. Look at Macy's already. So you've got a stock that we should look at together, which is?
Yeah, Deckard, it's one of my favorites. I enjoy trading this stock and have had a lot of success with it. So I'm kind of coming back to it again. I'm kind of upset that I missed it here the last few days because it was on my radar and it just got away from me.
I thought you actually already had it. You know, we spoke about it as it had gapped up. And there's a particular technique that I use in the gap. And this is fulfilled. Look, there's an A, B. Oh, I have to do this. If I don't do it now, I'm going to do it during the break. There's a particular technique that I teach in my Master Trader series, and I'm hoping to have another one coming up in December, 5713, 5690. So if you look at the 120-minute chart, 5820, 5831. So this goes to a quick A to B. There's a news announcement, or it was earnings report. I don't know what it was.
Earnings report. Yeah.
A great earnings report, folks. This is a stock, Deckers Outdoors, that was just the baby, the darling of Wall Street, all the way from late 2009, early 2009, right through until 2011, when it made a peak D top, having gone from the 200-period exponential moving average, another technique I love to use, at 1241 back in March of 2009. What does it do? It goes all the way to 118.90 in October of 2011. Then what does it do? It comes back to where? Right to the 200-period moving average. I only saw this late. I wish I'd seen it sooner. Then it goes back above the 9 EMA. It's in leg C, and I do have to call this a counter-trend rally. That's good. It's only it's not a qualitative thing. It is just a statement of fact that it is in a trend that is going back towards the previous major high back in the 118 area, having come down to, what did I say it was, 28 back in 2012. So this is a counter-trend rally, even though it could still have a peak D. But the technique I wanted to talk about was right here in the 120-minute chart, because what you do when you have a big spike, you go to the smaller time frame, and within the smaller time frame, there should be a rally that goes, if it holds the low of the gap, it should go into a smaller rally that takes you to what I call an inside buy mode in the Chapman wave in a smaller time frame, going to a D, which goes to just below or just above the previous high. In this case, 70.80 on the 28th of October at 11:30 in the morning on the 120-minute chart. It goes to a peak at 72.10. So it goes above it by actually 1.5 points, pulls back towards the rectangle formation, starts another A, B, C. It's in leg D now in the second. I'm going to do this so if anybody's actually using this as a demonstration, it's a great demonstration of this particular technique. A to B to C to D. And now what we're looking at is just a little toppy in the daily, just a little on the 120-minute chart. The daily is in a powerful leg C. It should go to D. Where would D likely stop? Well, that's a tough question. So what I have to do is I have to open up. I used to have this all notated beautifully. Anyway, what I have to do is say, is there a chance that this is not leg E, but leg E/A in the weekly? And then I say, no, don't get excited. Just do your horizontal cross. Look for the most hit number in this particular stock. Draw a horizontal line all the way across, and that should give you a lot of information. And right there between 75.50 back in the week of the 30th of December 2011, 72.78 back in the week of 19th of August of 2011, all the way back. This is the line. And what has it done? It has just spiked above it. That says to me, now you've got to draw in some other very important trend lines that you will find in the Chapman wave. When I do this, I always go to a particular candle. I draw the upside. Then I say, okay, it looks like there could be a cup formation forming. Well, the most obvious cup formation will be this one here. Doesn't have to go to a low bar to be an equal left side, right side price time match. But we have to find something. And what this is saying, that to get to that level right there, let me just draw this in. If I do that, that's not going to fit. It has to be the best fit right there. That says that Deckers, and this could be leading up to the holiday season, could go to, wow, that works beautifully, towards the very last week of December, working its way towards the 91.5 to 92.27 high of the week of the 17th of February, and that would be my target. So that's how I would be looking at upside potential. And what it implies is sometimes you break above the arch, the cup, left side lip. You need to just come back and do some testing. But I don't think that's going to happen until you get leg D, at least leg D in the daily. So I like it. Here's my recommendation. And I know that you'll think about it. You won't just dive in, and you'll have a particular way of trading it. My thinking right now is that Deckers is showing all the signs of being one of the sexy stocks going into the end of the year, number one. Number two, DECK, which is trading at 76.62, has a gap that should not be filled for quite a while, and then it will be filled, and that gap is below 66. So the further it goes away, the less important the gap is. That's the way I look at gaps. I spent a little time on it during my webinar on Friday, discussing how some gaps have never been filled from the big spike that they took off on back on the month of March of 2009. And if you go back even further, some stocks haven't filled gaps for a decade or more. But that doesn't mean to say that all gaps don't get filled. It says that when you reverse to the upside or the downside, as you're approaching a swing point or a gap point, then it becomes your eye, or your focal point for your eye. And that's really what's important. Yes, it's not right now. If at any point in the next week, Deckers actually, just for whatever reason, takes a dive and goes under 69.42 to 69.20, then I say, okay, let's start thinking of the gap. But in the meantime, I'm going with a weekly chart, and my weekly chart says you can go an E and even an F over the next few weeks. You don't have to be thinking whether it's an E/A. The MACD is at 83%. The MACD is strong. The stochastic's at 83%. The daily is at 85, almost 86%, with the MACD very strong. The monthly chart has the potential for a little squash here, but it's at 94%. And in fact, the irony is that the monthly chart is giving you the best indication of the strength of Deckers. Now, I'm shocked to say that, because this was on my list as one of the very weakest stocks on the way down, and I personally have missed a very good opportunity to have this as a trade. And what's fascinating, it came down in one move, a single leg A from the 118s to the 28s, and that's impressive when a stock does that in one move or two moves and then starts moving up. And that's what it's doing. I like it. I think you got your eye on the prize. And all I can say is that the 120-minute chart says if there was a pullback, the 73.70 to 73.20 area would be a very good support level. 73.55 right now is the 9-period exponential moving average, and it is in leg D. So it doesn't give a pullback before you get your chance for leg D in the daily. I don't know, because the 120-minute chart can easily recycle. I like it.
I'm just kind of thinking I'll probably start a small, maybe a December call position in it once we get a peak C in the daily. At least start maybe a starter position in it, and then maybe add to it.
That fits very well. And I knew that you would be looking at something in the options area. Yeah, I would be thinking along those same lines. Nice, okay, good eye, Travis. Thanks so much for calling. Thanks for bringing it to our attention. We'll be right back. Thank you very much. Have a great day. We'll be back, folks. Dow's down 58, S&P's down 2, struggling a little bit over there. I'll be right back at 877-927-6648.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, as we're about to go to the next call, I just want to say I had a question requested at the end about Dick's Sporting Goods, looking very good. Leg D in the daily, holding the 9-period moving average, leg C, brand new leg C in the weekly, and the monthly is in leg E. Hold it, hold your position. I would say hold your position. And I would want to add to it. I'll be looking at it as well. I'm going to write it down here. I might even look at it if it pulls back one more time. We can get to the 53.50 to the 53.20 area. That might be another entry point if you're along. Now let's go to our next caller. We've got Rick in British Columbia. Hi, Rick. How are you?
Basil, how you doing?
Very well, thank you.
I'm looking at GDX and GLD.
Yes.
And it looks to me like that the golds are probably going to go and test the lows again. What do you think? I think it's around 1182 on the gold contract. But
we have a mixed market at this particular point. And because we have a mixed market, the irony is that the GDX, which is the gold miners, it's the market vectors gold miners ETF, and then the GDXJ, which is the junior, the GDX did not, unlike the GLD, did not in the last move go from a trough at 121.85 to a peak D at 131.44. The GDX couldn't make that D. And my suspicion was that that very sharp spiral to the upside back in late October, early November was artificially induced. And one of the reasons why I drew in my charts the H that goes to an M pattern in the weekly charts was because there was no veracity, there was no confirming it in my work that I do technically, and my monthly charts say, and I'm still of the conviction, oh boy, I could be totally wrong about this, I'm still of the conviction that the gold shops that have opened up, selling gold, buying and selling gold, when I need to for rent signs on those sorts, and then I'll be convinced that we're getting really close to another powerful, I mean a more intermediate term move. That'll be a counter trend move at first in gold. So I'm of the opinion that you can trade on a very short term basis. You can pick your spots. You can use swings. Sometimes the swings hit, sometimes they don't. You know the song, it don't win a thing if you ain't got that swing. But at the most important moment, you're looking at the GDX, which has a weaker chart formation than the GLD. I was asked in the den, I'll do it now because we can compare it. I'm looking at the continuous contract of silver. Well, silver's given back almost all the gains that it had from the low of the 15th to the peak D high on the 30th. And the weekly chart, like the dollar did earlier on, a couple of weeks ago, or maybe a month or two ago, it broke its support level in the rising trend line after making an arch. Well, the silver's done. If silver takes out the low of 20.495, I'm talking about SI. I'm going to grab it quickly. I think this would be good. Yeah, that'll be the same thing on the. I'm talking about the January contract. I don't know if people trade the January contract, but if it takes out, it's already done that. The low of 20.715 already. It's already taken it out. I'm not that happy, and I think the dollar is acting way better. So to answer your question, I agree with you. I'm sorry, what?
I was going to say that. Like the dollar looks to me like it's going to 83.
Yeah, 82.20. I go one step at a time. Break 81.50, then you got 81.82. It breaks 81.82. Yeah, then we can talk about 82.20. But it is acting well. So we just about run out of time. I think you hit it right in the head. I think that gold stocks might have a little balance, but so far they are mostly looking very, very weak, and so is the GDX. Thanks so much for calling, Rick. I appreciate that. So, folks, let's just wrap up because you've got Larry Pesavento coming on right away. And don't forget those Tiger dollars. Let me just sum up very quickly. If the Dow is able today to close closer to the 50,750 area, somewhere around there, and the volatility index drops to 12.90, we could see a pop to the upside to start that leg F on the daily to over 50,797. It'll break down if by the end of the day the Dow breaks under 50.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.